All right, we've just completed part A of problem 10-1A. In that part, we've done a bunch of journal entries related to equity. In this part of the problem, we're going to be preparing a statement of changes in shareholders' equity. Now, our starting point is, of course, last year's shareholders' equity, and we have it right up here, right? What I've just highlighted, that's last year's shareholders' equity. At preferred shares, common shares, retained earnings. We see the amounts. That'll be our starting point. So we're going to start with a title, name of the company, Bossman Inc., name of the statement we're preparing, statement of changes in shareholders' equity, and a date. And the date for this one will be for the year ended December 31st, 2017. We're looking at December 31st, 2016. This will be the starting point, though. We'll list our preferred shares, our common shares, and retained earnings. We'll say that's what we're starting with. And in fact, I've gone ahead and done that. So if I scroll down here, you can see at the top, I've got the name of the company, Bossman Inc. The name of the statement is Statement of Changes in Shareholders' Equity, and the date for the year ended December 31st, 2017. Then I've listed across the top all of my equity accounts, preferred shares, common shares, and retained earnings, and a total. Then I say, here's what I started with. Here's what I had on January 1st of this year. And you might say, well, wait, I don't have January 1st data. I have December 31st data. But of course, you'll remember the end of one year will be the same as the beginning of the next. 11:59 p.m. on December 31st, 2016 will be the same as 12 o'clock a.m. on January the 1st, 2017. It's assumed to be the same amount. So that's why we start here with preferred shares of 50,000, common shares of 200, retained earnings of 750 for a total of $1 million. Now we just got to transfer all of our entries into these columns. We've got to say, okay, all of the entries that affected our preferred share equity, our common share equity, or our earned capital, our retained earnings, they all need to come down. The other relevant piece of information here is that we had net income of $125,000, and net income, of course, affects our retained earnings. So let's go ahead and go through this one as best we can, and we'll start with preferred shares. Just I see them first, so let's look at any transactions that affected our preferred shares. And really, there appears to be just this one right here, debit equipment credit preferred shares. We issued preferred shares, $90,000, and looking up, you can see there's preferred shares issued. There's also preferred dividends, but the preferred dividends don't affect our preferred shares. They affect our dividends account, which affects our retained earnings. So our preferred shares, we issued $90,000 worth. So I will just note preferred shares issued $90,000. No other preferred share accounts were affected here. We had preferred dividends, certainly, but again, those affect our retained earnings. Moving on to common shares. We did issue common shares. That was the first transaction, 5,000 shares for $12 a piece. We issued common shares. $60,000 worth. I should be totaling here, so our preferred shares, our total preferred shares issued was 90. Our total common shares issued was 60. We also issued common shares in the form of our common dividend, right, where we had a stock dividend. And that was on August 7th. You can see we went debit retained earnings, stock dividend $65,000, credit common shares $65,000. Well, there's 65,000 more common shares in the world because of that transaction. So the stock dividend made our common shares go up by 65. It also simultaneously made our retained earnings decrease by 65. So it has a net overall effect on our shareholders' equity of 0. Our common shares up 65,000. There's 65,000 more common shares in the world. Retained earnings down because I'm paying out my common shareholders in the form of common shares. Okay. What else happened? Well, we didn't have just a stock dividend. We also paid a preferred dividend. And it doesn't matter if we paid it or not. The fact that we declared it is enough. So you can see on July 1st, our preferred dividend is $6,000, just right there. And we're going to have to note that affects my retained earnings negatively. It does not affect my preferred shares. It affects my retained earnings, though. The final item we've got to include is net income. Oh, and I should note that that's negative $6,000. And our net income was $125,000. So at this point, I am ready to total. $50,000 plus $90,000 is $140,000. And that's the amount I had at the end of the period. That's the amount I had on December 31st, 2017. 200 plus 60 plus 65, that's 325. 750 minus 65 minus 6 plus 125. I need a calculator. 750 minus 65 minus 6 plus 125. 804. So if I just add across here, 140 plus 325 plus 804, 1269. I'm also going to add it down just to make sure. So 1269, keep that number in your mind. I'll add down 1 million plus 90 plus 60 minus 6 plus 125. I missed that 1269. Just got to add that 125 in the total, and our grand total is 1269. Double underline, double underline, double underline, double underline, $sign at the top and bottom of each column here. And we have prepared a good statement of changes in shareholders' equity. We could also then move on and prepare the equity section of our balance sheet. We would list each account, preferred shares. We would list the number of shares issued, and in this case of preferred shares, we'd also list the amount of the dividend and whether it was cumulative or not. For common shares, again, we just list the number of shares issued, as well as the amount, of course. And for retained earnings, we would just list the amount. So that's how I would prepare the shareholders' equity section on the balance sheet were I asked to do so. But the statement of changes in shareholders' equity really gets us where we need to go. So I hope this was useful for you, and stay tuned for the next video.